Jon Webb, who's the managing partner at Game Theory, is up next. And continuing the movie theme, Jon's going to take us on an insight journey, quote, Back to the Future. Jon, over to you.
Morning, everybody. Thanks for coming. Thanks for coming to listen to this. Wow, the lights really are bright up here, as Richard said. I'm Jon Webb, managing partner for Game Theory. We are a relatively new data and analytics company. We've been around for a couple of years now. We formed because we saw a gap in the market. We saw that a lot of our clients from our founding companies were being swamped by data, not quite understanding what all of the data meant, and also they had a need for much faster, smarter, and predictive insights, as you can see. I guess our hunch that that gap in the market existed because over those 2 years we've partnered with a lot of leading clients, as you can see on the board. There's some of them there. We're an independent consultancy. We've got a global footprint, and we're working with some quite large companies to try and disentangle the massive sets of data that are available out there. So I guess one of the things that Richard said that was quite interesting is there are huge amounts of data flows, and within marketing generally, depending on your business sector, there could be hundreds of these, and new ones are coming online all of the time. Now, one of the key problems we've got, and again, this echoes the previous talk, it's almost common sense that companies that use data effectively are, on average, other things being equal, going to make much smarter and better decisions going forward. But when you've got all of these KPIs, so welcome to KPI City with all the KPIs, when you've got all of these KPIs online, and a complex data ecosystem with the KPIs interconnected, which ones do you really focus on? Which ones really matter now? So if you're a retailer, which KPIs are going to be really important in determining your success for the next sales period? If you're a tech company, which KPIs are going to be important in understanding whether your new gadget launches successfully? If you're in entertainment, how do you know in advance whether enough people are going to go to see your movie or watch your new TV show that it pays back? Okay, now there are techniques available. Over the last decade, probably a lot of marketeers have been using marketing mix modeling to identify those KPIs to try and get a feel for what's really important to their business over the next 2 to 3 months. But there are a bunch of problems with KPIs. So, I mean, one of them, as you can see, a campaign has run that needs to be evaluated to be used to feed into the next campaign plan. So the campaign or sales period is over, but then you've got to collect your data, you've got to run a model, you've got to update the analysis. And before you know it, you can be 2 to 4 months past the campaign. So the results aren't timely. They're not available quick enough to have an impact on your business and to change things going forward. But much worse than that, the conventional techniques within econometrics or market mix modeling use data going back 3 years. Now, I guess now you'll see the point of the rearview mirror. Just as you wouldn't drive a car by focusing exclusively on the rearview mirror, there's no way you should run your business by looking at events that happened 2 to 3 years ago. The way the world is changing now and the way that consumers are adapting and responding to new data feeds, to new social media, and so on and so forth, there's no way that stuff that happened 2 to 3 years ago can have the same impact on your business that it did then. There's just no way. So it doesn't make sense to focus on stuff that happened a long time ago to try and predict the next sales period or the next launch. Now, that's not to completely dismiss market mix modeling. They're fine if you want the accounting measures like return on investment and maybe to get response curves to plan your media effectively. That's all fine, but they're not useful to predict the future. Now, fortunately, there are techniques that are. We call them lead indicators. So just imagine if you could. I mean, one of the problems with MMM is that you just can't know with any degree of certainty whether you're going to hit your sales target, whether you're going to get enough people through the door at a cinema to guarantee a good opening weekend at the box office, whether your new phone is going to sell well. There's no way with market mix modeling because of the lags between the model occurring and the output being available, that you can feed new insights through to your activation partners quickly enough to change the campaign on the fly. You just can't do that. But with lead indicators, you can. So the whole point of lead indicators is that we're not necessarily looking for causation. So this was an interesting point to do with the divorces in Maine and the consumption of margarine. I've got my own personal favourite of that. It's to do with the rate of inflation in Scotland and Australian cricket batting averages. When prices rise quickly in Scotland, the Aussies do really, really well in cricket. But that's not causation. It can't be causation, obviously. So in the same way with lead indicators, we're not looking for a causal relation between the indicators that we're looking at and success at opening weekend box office or launch or a retail sale. It's a proxy for social engagement or consumer engagement. And the lead indicators that we would often use would be from the social arena. They would be from owned and earned media. So we're thinking things like Twitter feeds, Facebook shares, Facebook likes, and Pinterest is a great example. I'm going to show you a chart from Pinterest that's got different events that are really key in a retailer's calendar. So things like Christmas, Mother's Day, back to school, key events for retailers. And if they don't get those right, they can have a difficult year. What's interesting on the chart is you can see that the number of pins on Pinterest for these events build over time. So yeah, they may indeed peak at the time of the actual event. So you can see for Halloween, they're peaking around the last day in October. But they're building much earlier than that. They're building at least 2 months in advance. I mean, Christmas is a truism. I'm sure we all know that Christmas is less than 2 months away now. But those pins are building. The pins are starting in August. So these are classic lead indicators. These are generic. They're for the event as a whole. But you can drill down into your own brand. And you can use information like this as a lead indicator to predict how successful your next event is going to be. And we would do that. I'm not going to make this like a technical session because I'm sure half of you would walk out. But there's a degree of analysis and modeling involved that goes on under the hood in the background. By the analysis of previous events, similar to the one you're looking at now, we would understand the level of pins required to hit your success targets, the level of retweets, whatever we find to be the key leading indicators, and there are usually 3 or 4. We would be able to identify those and then track going forward to make sure they're at the right level. So we would identify the lead indicators, whether it's pins, whether it's, it could even be Google Trends, to be honest. You then need to understand how to leverage those lead indicators. So let's say quality of website visit was a key lead indicator. So the level of people, the number of people visiting your website, the length of time they stayed on the website, the number of pages they looked at, maybe they downloaded an app. These could all be possible lead indicators. Now, if the quality of website visit isn't at a sufficiently high enough level, what can you do to flex that? Well, I guess there are some fairly obvious things. If you're a retailer who's looking to sell kitchens or bathrooms at a January sale, what's the first thing people see when they land on your website? Is it a kitchen or a bathroom? If not, it probably should be. If it is a kitchen or a bathroom, or the thing you're trying to sell, is it at an appropriate price point? Will it appeal to the mass market, or will it just appeal to a certain section of your customer base? So there are lots of things you can do to tweak those lead indicators to make sure they get back to the right level, to give you a degree of success. So I just wanted to walk slowly through the process. I guess I've gone quite quickly through it. To begin with, you've got to set your coordinates. Now, lead indicators isn't another forecasting system. In fact, it couldn't be further from the truth. We don't need to forecast because we know what the business targets are that you're trying to hit. Those are the sales targets that have already been set. So all we're trying to do now is, now we understand that, what level do the lead indicators need to be at? What level do they need to run at to indicate you're going to hit those targets successfully? So we understand that. Then we move through into driving those KPIs, so driving those lead indicators. So again, if Pinterest provides a lead indicator for you, are the number of pins associated with your brand and this event running at a high enough level to indicate that you're going to be successful in hitting your business targets? And if they're not, what can we do about it? Do we need to flex the digital content that we're running with? Do we need to tweak the website, for example? And then understanding your coordinates and where you're aiming for, understanding how to flex those KPIs and drive them to the right level should enable you to reach your destination and hit your required sales goals. So what would the lead indicators be? Well, when we run this analysis for our clients, and this analysis is live within retail, within tech, and within entertainment, we run it at different periods out from the launch of the event. So we'll run it 20 weeks out, 16 weeks out, 12 weeks out, down to 4 weeks out, and then weekly after that. The further out you go from the event happening, the lead indicators tend to be quite general. Consumers are really deciding whether or not to spend money. They're not deciding where to spend it yet. So they tend to be things like consumer confidence and macroeconomic factors like unemployment. But the closer in you get to the event, the closer in you get to the launch, the lead indicators are much more granular, things that you would have control over. So Twitter, the number of retweets, Pinterest, Facebook, we've already talked about, and quality of website visit, and organic search. All things that you can control, all things that you can track, and all things that can potentially give a view on whether you're going to be successful in hitting your desired sales targets. So let's come back to KPI City. Now, when we looked at this on the second or third slide, there are a whole host of KPIs there. There were hundreds. And this is something everybody, all marketeers are facing every day. Which KPIs do you really focus on? Well, with lead indicators, you zero down on those 2, 3, maybe 4 lead indicators that have a key impact on your sales over the next 3, 4 months or your next launch. Not to say the other KPIs aren't important. I guess they're called KPIs for a reason. But they can be tracked over a longer period of time. We don't have to look at those on a daily or a weekly basis. With the lead indicators, we know exactly which areas to focus on to best guarantee our business success. But I guess don't take our word for it. As I say, we've partnered with retailers, with this methodology, retailers, entertainment companies, and also firms in the tech sector. It's a methodology that can really help sort out which factors are really important now for the next 2 to 3 months. And it just gives you a bit of guidance on where to focus your activities and your attention. Okay, I've whizzed through that pretty quickly, so I'm now going to throw it open. I mean, it would be great to get any thoughts from the audience or any questions.
Thank you very much. Cheers, John. It was fantastic. We have a couple of questions, and we're short on time, so I'll crack straight on. As a supplier, what brands would you suggest are really getting predictive insights right? You can call upon your own clients or perhaps others.
Yeah. I guess I'll pick a company that isn't a client at the moment, actually, to go with first of all. They're a bank, they're a high street bank, they're well known. I won't embarrass them by naming them. But at the moment, I mean, I actually used them in this deck. They are currently waiting 2 to 4 months. Well, they're waiting about 4 months, actually, for results back from an M&M study, which is evaluating their media, which they're then trying to feed in to their media plans going forward to make sure they hit their desired outcomes, which at the moment is focused around current account growth. Now, that's just not going to work because their model, there's nothing wrong with the model. We've taken a look at it, but it's based on 2 to 3 years worth of data. And I come back to it again. The consumer, even in banking, with all the inertia that's prevalent in banking, the consumer now is a very different beast to what it was 2 to 3 years ago. So they're using a model that's already out of date. As soon as the results hit the chief marketing officer's desk, those results are out of date. So I would say they're getting that wrong. There are companies we work with in America, so we work with a large US retailer. I would say they're getting it right. Before we started doing lead indicators with them, they kind of regularly missed their sales targets. Now they don't. Now, you could add into that a whole host of factors. I'm not saying we're the only company responsible for that. Obviously, the economy in America is picking up as well. That's helping. But I think we're having a marginal impact there.
The proof of that is in perhaps what happens next week with the election.
Indeed.
Okay, we have a winning question in regards to likes anyway. How do you know what the correct level for each of these lead indicators is? And supplementary to that, do you use retrospective data or data shared from other similar client cases?
Yeah, that's a great question, actually. We would potentially share from similar client cases, although we would tend to look at that at the beginning, almost as a way of setting the framework or the agenda, because each client is different. Each client we work with faces unique set of problems and a different market context. Some might be market leaders, some might be second or third in markets. So we tend to not share across client case studies too much. We model it, is a simple answer. So if I was working with a retailer and looking at a January sale, I guess a lot of retailers in the UK have a January sale. I would look at the previous January sale. I would almost certainly look at it store by store. Most national UK retailers have got at least 250 stores. Most have got considerably more. And I would look at how the lead indicators, how the potential set of lead indicators best suggests a pattern of response. So, there could be about 100 potential lead indicators, ranging all the way from all of the website diagnostics, right through to some pretty granular data searched by specific term. Now, some of those are going to have an impact, some won't. There's usually 3 or 4 key ones that will have an impact. And it's just done through simple analysis. I guess the point is we wouldn't go as far back as 3 years. We would use as recent data as we could possibly get. But it would be generally based on the client's own data and their own response patterns.
Thanks for that. We've got a couple of questions and 2 more minutes to get through them. I'm going to switch to the the second one here, because it's a common and often asked question, perhaps in a slightly different way. But how do you link social activity with driving business targets? How do you get?
Yeah.
I don't know whether or not that means that you shouldn't bother.
No, you can. It's difficult.
So, how do you get data that shows retweets, for example, equals sales? Or can you? Is that what we should be looking at? Is that the measure of effectiveness when it comes to social?
I guess there are many measures, but we're all in business, and ultimately you do activity because it impacts on the bottom line, whether it impacts on the bottom line this week or in 3 years' time, through consumer loyalty. If anybody ever tells you that they have directly linked retweets to sales, they're not being entirely honest with you. I've been doing data, and I know retweets haven't been a big thing. You go back a decade, they wouldn't have existed. But I've been in data and analytics now for about 25 years. It's impossible to correlate something like retweets directly to a sales response. Now, what you might want to do is do some intermediate analysis. Now, retweets, I'm pretty sure, would never be correlated directly with sales. Well, they may well be correlated, but I doubt there's any causal relationship at all. But what you might find is that retweets might drive Facebook engagement, which might then drive visits to website, which might then drive a repeat visit to a website, maybe at a deeper level, maybe download an app, maybe more likely to respond to an email, which maybe then leads to a sales response. But it's, I guess if we all go back to when we were studying or when we first started in marketing and remember the funnel. The funnel went out of fashion a few years ago. Everybody thought it was going to be direct response. The funnel's back. It's not really a direct response world. Okay, we've got the PPC, but TV has a massive impact on PPC. I think everybody acknowledges that now. So the funnel is back, and things have an impact at different levels of the funnel. And with that understanding, you can tailor the analysis to fit that. So tweets equal sales? No. Tweets affects a host of intermediate factors that then affect sales? Possibly, potentially. But then there's a whole set of other factors about the fact that tweets are growing exponentially and you have to deal with the data, blah, 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 to clean it up. So.
Thanks. There's a couple more questions, but I think we're probably out of time. Jon, are you hanging around? If you've got,
I'm going to hang around, yeah.
If there are anybody who we didn't get time to ask their questions, then I'm sure Jon will be happy to talk to you at break. You heard it here first, everyone. The funnel's back. Marketing fundamentals. It'll never catch on.
Oh, God.
Thank you very much.
Don't quote me on that one.
Thank you.
Cheers.